Today's topic on the Legal Minute: forming a corporate entity. There are three types of business entities. The first is a sole proprietorship. This is essentially every business that's ever been created that doesn't fall into one of the other two categories. Whether it's a lemonade stand or a retail store, every business that's formed that isn't a partnership or a corporation is a sole proprietorship. In a sole proprietorship, your business income is passed directly through to your tax return, and you have no corporate shield for any action taken on behalf of the business. This means that you can be sued personally for anything that your business does, whether it's not pay a bill or harming someone. The second type of business entity is a partnership. A partnership is a sole proprietorship that has two or more people, put simply. The dangerous part of a partnership is that you are liable for the actions of your partner. They have the ability to obligate you to pay debts through the business, which will then flow down to you personally should the business fold, because a partnership does not get corporate shield or protection. There's also something called a limited partnership, where you have a general partner who has unlimited liability and limited partners who don't really have the kind of liability that the general partner has. There are lots of nuances in the law regarding partnerships and limited partnerships, and you must be very careful if you select this type of entity. Your business income in a partnership flows through your personal tax return as well. The third and last type of entity is a corporation. A corporation under the law is a non-living entity, and it's treated as an actual person in terms of a legal fiction. So a corporation, for example, can be sued in its own name, whereas a partnership or a sole proprietorship cannot. In a corporation, you form a board of directors who hire officers. Stockholders of a corporation are limited in their liability to the amount that they've invested. For example, if I purchase $100,000 worth of stock in McDonald's, the only money that I could possibly be liable for is the $100,000 that I've put in. If McDonald's is sued for $10 million, they can't come to me, the stockholder, to satisfy that judgment. The negative part of a corporation is that it's double taxed. Corporations are taxed as a corporation, meaning they pay corporate income tax. They then distribute profits to you personally. Those profits are then taxed on your individual tax return. So taxes are paid twice on the same money. This is the reason why today limited liability companies, or LLCs, are the most popular entity formed. The state of Nevada actually forms more companies than any other state in the country. Limited liability companies, or LLCs, provide you with the same level of protection that a regular corporation does. Members of limited liability companies are not personally liable for the debts of the business, and they can't be sued unless they personally commit fraud or gross negligence as part of the business. LLCs are generally cheaper and easier to form and maintain. Most importantly, limited liability companies, just like corporations, have the ability to be taxed as either a C Corp or an S Corp. Many clients are confused about what a C Corp and an S Corp is. A C Corp means that you're being taxed as a corporation, paying corporate income tax, and then doing the double taxation thing with distributions to you being taxed on your personal return. An S Corp, on the other hand, is taxed only on your personal return and no corporate income tax is paid. Whether you're an LLC or a regular corporation, the election of a C or an S Corp designation is strictly for tax purposes and has nothing to do with the underlying entity you're forming. That entity, whether it's a corporation or an LLC, is done to prevent you from being personally liable. Should you have any questions about today's topic or comments that you'd like to make, please feel free to contact our website, www.nevadalawgroup.com. This has been The Legal Minute.